right, everybody, how you doing? It is Monday, April 13th. As you can see, I am not wearing the mask anymore because our governor here, Andrew Cuomo, said as far as New York is concerned, the worst is over. So I'm taking him at his word and no more mask anyway. I have a lot of video footage of me wearing the mask to symbolize the ordeal we have been going through. New York, of course, the epicenter of the pandemic here in the United States. Anyway, you know all that. I've said that so many times, and I'm glad to hear that the worst is over. Now, I got a lot to talk about today, and hopefully I can do it all in one video. First, a few announcements. Number one, it is Monday, so that means I just sent out the new edition of MMT Trader. If you want to get that, go to my website, pitbulleconomics.com, and sign up for a 30-day free trial. The link is right here in the description. Number two, and I don't know if I mentioned it, well, I didn't because I didn't do a video on Friday, but Fiscal Flows are finally starting to pick up. We have seen, or I have seen, and I've been talking about this and sending out the detailed information and charts and data to my subscribers, but there was a very noticeable pickup in Wednesday, Thursday, and Friday. You could see it on the daily treasury statement. We went from an average daily spending by the Treasury of about 20 billion a day in March to almost 50 billion a day at the end of last week. So in a 2.5 time increase in spending. We have unemployment benefits now at 5.2 billion over last year. Now that ramped up in 10 days. It went from negative year over year to up 5.2 billion in 10 days. So that was a pretty rapid increase. And there are other items in spending that are picking up, mostly concentrated in the health area, health spending. So that's good. That's positive. And interestingly, Goldman Sachs, which had a negative outlook for the market up until basically today, flipped its position around and said, we have hit bottom. The market has bottomed. And it is interesting because their reversal, their flip-flop, coincided with that pickup in the fiscal flow. So I can't prove this, but it almost seems like somebody over there is reading my stuff because I've been on top of that. I've been the one talking about that. I monitor that every single day. So we see the fiscal flows on a daily basis, and that is, that is the core of my analysis. Now, here's the thing I want to talk about, and hopefully I can get to all the points that I want to mention. If you go back, if you've been following me for the last year, actually more than a year, I have been really the only one out there explaining how the Fed's monetary measures, which have basically been asset purchases and dumping billions upon billions and now trillions of reserves into the banking system, has been disruptive and also an impediment to loan growth. And I explained that the banks are subject to regulatory constraints, one of which is the supplemental leverage ratio, and you can that is calculated by taking tier 1 capital, bank capital, divided by consolidated assets, and within those consolidated assets, reserves are included, and that ratio has to be 3% or greater. Okay. And most banks internally keep that up around 6%, some even 10%. So what happens is when the Fed dumps all these reserves into the banking system, the denominator in that equation gets bigger and that leverage ratio shrinks to the point where it either approaches the minimum threshold or it goes below. If it goes below, the banks have to raise capital, or they have to sell some existing assets, which could be risk assets, it could be, loans, it could be whatever, trading assets, whatever. So, and here's the thing, I've been basically the only one saying this, but now we have comments from Jamie Dimon, and I'd be happy to send these comments to anyone who would like to read them. Just, again, go to my website, sign up for a 30-day free trial of MMT Trader, or you can just Google Jamie Dimon. If you don't want to sign up, you can Google Jamie Dimon and read his comments. He made comments to shareholders saying that the banks, his bank and other banks, basically, he was generalizing, the banks, they are at the limit of what their capital allows them to do insofar as lending is concerned. Now remember, bank capital is the only constraint on lending. It's not about reserves. And here is where the interesting part comes in, because so many people, they're all out there, the quacks and officials even within the Fed, because I've seen them say things like, we need to supply these reserves so the banks will lend more. No. Jamie Dimon, who is a banker himself, says the truth. The reserves have become an impediment to further lending. This is one of the problems with the SBA loans now that were part of the stimulus package. The payroll protection plan, which the banks are intermediaries in this, they are the ones providing the loans backed by the government. The banks have seen their assets grow exponentially in the last 4 or 5 weeks, mainly because of this enormous amount of reserve addition that has been created by the Fed through its asset purchases. And they're maxed out with respect to their capital. So I want you to really think about this. Because the mainstream view, the prevailing view is that, they're printing, right? The Fed is printing money, giving money to the banks. They're printing money, and they're going to lend out all this money now because they're flush with reserve. No, it's exactly the opposite. And you don't have to take my word for it. Listen to Jamie Dimon. He specifically says that regulatory changes are necessary. He said his bank is not asking for a regulatory change. He said they're well capitalized, they're in a strong position, but he did say we are basically at the upper limit of what we can lend now. Because the amount of capital we have, which is sufficient under all regulatory guidelines, is maxed out in relation to the amount of current assets that they have. So, you either have to add more capital, like they did back in 2009 with the TARP. Remember the TARP? The Troubled Asset Relief Program, where basically they infused the banks with more capital. Capital is the only constraint on bank lending. So I really want you to understand this, and I really want you to think about this, because the prevailing view, the mainstream view, and I'm not just talking about the quacks out there who always say print money. I'm talking about people, at the controls, people at the central bank. Look, we could talk about the ECB, where the same belief is there. We could talk about the Bank of Japan, which is doing this for 20 years, believing that flooding the banking system with reserves means the banks will lend more, when in actuality, the banks themselves, the bankers themselves are saying, we can't do it. You maxed us out with respect to our capital with these trillions upon trillions of reserve additions. Now, I'm the only one explaining this to you, but this is reality. And again, we're living in this bizarro world where the people at the top, the policymakers, the ones who are supposed to know, are doing the exact opposite of what they should be doing. Now, What should the Fed be doing? Well, yes, it sets rates, and once it sets a rate, it should ensure that that rate is maintained. And if it needs to add reserves or remove reserves to keep that rate sustained, in most cases, the central bank merely has to state a rate that it wants, and the market will move to that rate. But there have been instances in the past, and we can go back to last September, when, remember, the overnight rate was spiking. But why did that happen? It happened because the Fed brought reserve balances down so low, it caused the system to be short. But that's a whole other environment that we were in back then. Right now, what's happening, or what has happened over the past 4 or 5 weeks in response to the virus, what the Fed believes that it is fighting the economic crash with these measures, is in fact impeding the ability of banks to lend. Now, I'd be happy to go into this more with whoever wants to hear about it. Please go to my website, pitbulleconomics.com. Sign up for a 30-day free trial of MMT Trader. I also talk about it in my report today. See everybody tomorrow. Bye-bye.